All right, this comment is in response to a video I did recommending that you consider, if you have a young driver at home, 18 years or older, if they drive a car that is paid off, that you may want to consider putting that vehicle in their name and getting them their own insurance policy to prevent the parents from potentially getting sued if that young driver gets in an accident. Now, every state is different. Some states, if they live in the home, you're still responsible, but here in Florida, that's not the way it works. So this person says, why don't you address the huge jump in cost for their insurance rates? Well, yeah, I've never denied that it will be more expensive, but what it really is about is, where do you want to have the risk lie if your young driver child, let's say, gets into a terrible accident, kills someone accidentally, and there is a big lawsuit? Now, yes, it could be double, triple, quadruple, I don't care what it could cost for insurance. And I'm not here saying that you should absolutely go out and that everybody should do this. My thought is, the folks that this will make sense for, if your family member has millions of dollars exposed, and let's say the insurance is going to cost you $1,000 a month, which for a lot of people is ridiculous, and it is a huge jump in insurance, and it's simply not doable. But for the family that has millions of dollars to lose, spending $1,000 or more per month on an insurance policy for their child that completely protects the parents' millions of dollars from ever being taken away from them may be of value for that family. Maybe not. But certainly for a lot of Americans that are struggling just to get by, dealing with inflation, dealing with the increased cost of everything these days, double, triple, quadruple insurance is simply not doable. But what I would say for those folks is, do the best you can. Maybe the umbrella policy is your best friend if you can afford that. If you can't afford that, just do the best you can. That's all we can ask of you. My thoughts are, if you can't afford an increased insurance premium because it is expensive and you're living check to check and just trying to get by in life, then no disrespect, but there's probably not a big chunk of money that a plaintiff is going to come take away from you. Because if you had hundreds of thousands or millions of dollars in assets, then at least you would have the money to pay the increased insurance cost if it made sense to you. Doesn't mean it has to make sense. But if you're living check to check and you're doing the best you can to get your kids, out on the road and hopefully to their job to help contribute to the household finances or to be financially independent on their own, then this simply may not be a strategy that's good for you. So it is available for those families that A, can't afford the huge cost of insurance, and B, have enough in otherwise exposed assets that they see the value in spending a boatload on insurance every month for their child to hedge against them being financially liable for a catastrophic event. I see these cases all the time, and while most families are not uber wealthy in this country, I seem to get calls all the time from families that have hundreds of thousands, if not millions of dollars, who call me Monday morning after their son or daughter gets in a terrible car accident over the weekend and somebody gets hurt or killed. And then they're playing defense going, well, what can I do now? Or what should I have done to prevent this? And so I was just trying to get ahead of that curve for some folks where it makes sense. So hope this helps. Have a great day.